Okay, guys, welcome back. Hope you guys are doing great. Once again, this is your presenters, Saifur Rahman. I am the market analyst, and I hope you guys are doing well. So, by the way, if you have any question, after the webinar, after the presentation, you can write me your questions, and I will be answering you after this session, right? So today our topic is very interesting, but I will try to keep it very, very simple because this is just a very, very basic information for the forex market and the financial markets, right? So I think we are good to go. Let's start. So I'm here on behalf of a STARTRADER. This is a reputable broker. We are FCA regulated, and we will talk about it any later. So let's start the discussion. It is all a very basic discussion. So for example, if you are a beginner, you should know this. And even if you are doing trading since 1 year, 6 months, 2 years, 5 years, you have to know this, right? You have to know this. So I want you to make a full attention of this session. It will take hardly 30 minutes or maybe 45 minutes. But at the end of this session, you will feel much difference, and it will be a very educational session, right? So let's start. I'm going to start the session. So before going towards, into the financial markets, into the forex market, I just want to tell you how the market started. Look, this is not important, but still there is a need to tell you why this is, or why the market, how the market started. Okay, so back in 6000, there was a system, that was called bartering system. In this system, basically, people exchanging goods and services, instead of using money or something, because at that time there were no money or something. So what people were doing, they were exchanging, like, for example, they were exchanging some vegetables with the different goods, for example, the clothes, or they were doing services. For example, if I'm doing something for someone and they're gonna provide me some food or maybe a shelter, right? So this was called a bartering system. So coming towards our next discussion, that is a Bretton Woods agreement. So after the bartering system, there was a system called Bretton Woods. Okay, Bretton Woods agreement and Bretton Woods system is, are two different things. Let me explain Bretton Woods system first. So the Bretton Woods system was basically, announced back in 1800. So in this system, basically, in this system, the markets or the countries are basically having a relationship, on the financial terms and the commercial terms. Okay, so that is a Bretton Woods. And what is the Bretton Agreement? Bretton Agreement is something which is created a collective international currency exchange, okay, based on US dollars and gold. Okay, so you understand this, right? Bretton Woods Agreement is something which was created for international currency exchange, okay, in between the different countries. So it was the base currency was that time was US dollar and gold. Let me make these things very simple for you. Well, the Bretton Agreement system is actually, let me draw it for you over here. This agreement is just to trade with the different countries. For example, this is the country and this is the country. They are trading each other, okay? And this system, this agreement helped these countries to trade in between them, right? But the base currency, they can only trade with the gold and US dollar, okay? And then, after almost a century or more than a century, this system went collapsed. Why? Because this agreement doesn't succeed. Let me tell you why. Let me explain it. with a very, a simple discussion. Let me make it very simple. So this agreement basically collapsed. Why? Because there were no inside brokerage. Okay, there were no inside broker. Well, the different currencies were having, a very fixed, you can say a price or the value. Okay, for example, let's say this star has a value of 1. So it remains the same for the 1 century, for the, for 1 century, the whole century. So it was a trouble. Okay, they need to change it. So that's why they, that agreement collapsed, because many of the like European countries and you can say America and Japan, they were having issues because their currencies were not even, going higher or, the weaker. They were stuck at the same price, right? So then there was a start. Okay, there was a start of the actual financial markets, and that is, start of the brokers, the retail brokers. Now, what brokers do? Okay, so broker is something. Broker is, let me tell you something. Broker is like, it is a medium. Okay, this is a medium. For example, let me make it simple. For example, these two persons are trading each other. Okay, so there is a broker involved in between them to make their deals perfect, right? To make their deals perfect. So the broker is, the broker charge their commission without a doubt, but it is, the broker responsibility that the broker should provide all the, all the feasibility in between the deal, right? So in the financial market, what the brokers are doing, okay, they has to provide the current rate of the financial markets. Financial market is all the currencies, all the commodities, all the, energies, everything. So we will learn about it, in coming slides. What are the energies? What are the currencies and everything? Okay. So the broker is actually a medium which has to provide you, the current exchange rate. Okay. So what is the floating exchange rate? Let me make it simple for you. Floating exchange rate is, for example, if one currency, okay, by the way, this is a direct related, with the agreement collapse. My apologies, I made this, at first, and then I'm doing it for the second. So after the collapse of this agreement, we had, why this agreement collapsed? Because we were having, the floating exchange rate, because I have explained to you already the currencies, the, the currencies of the different countries. So like, for example, Japan, Europe, and US dollar, they were stuck at, at one point. Okay, that was a reason of this, collapse, that floating exchange. Then we headed towards this, the brokerage things, right? I hope you guys have, cleared with this startup, right? So now coming towards the next slide, which is quite interesting. So what is forex market? Okay, let me tell you, the forex is not a one word, not a single word. It is a combination of two words. This is foreign, and this is foreign, and this is exchange. Okay, so it called forex. Let me tell you that forex market is the biggest market in the world. Okay, since, more than a century, and it is running, from a very, very past decades. So the forex word is basically, it is, a combination of two words called foreign and exchange. No, what is foreign and what is exchange? Foreign means, when you talk about the foreign, the first things came into your mind is, I'm talking about the foreign country. Okay, like, for example, you are sitting in Dubai and you are, thinking the foreign, the first thing which comes into your mind is you are actually thinking for the foreign trip, for example, to the other countries. So the foreign means, the world, the different countries, and the exchange is their exchanges. Now, what are the exchange? In the foreign exchange, it means the exchange of currencies between the countries. Okay, this is, for example, this is the country, this is the country, and this is the country, and this is the country. So there is the exchange, okay, between the countries, different countries, of their currencies. Okay, so a virtual marketplace where the participants can trade and exchange currencies, metals, commodities, indices, etc. So I just make it simple, the currencies. I know some of you guys don't know about the metals, commodities, indices, because this is a very beginner session, okay, about the forex market. So I'm going to explain the metals, commodities, and indices in my next slide, right? So now coming towards our next slide. Now let me tell you again, if you are having any question, just you can write it on your notebook or you can send me in the chat option, right? So I will reply you after the webinar. So what market, what makes forex market different, unique? Okay, as I told you before, the forex market is the biggest market in the world, the biggest trading market in the world, and the biggest investing market in the world. Okay, well, let me tell you one thing. There is a misconception about the forex market as well, that people, lose or win or whatever they say. But if we go into the real direction, if we go into the right direction, let me tell you, the forex market is the biggest market in the world. Okay, and let me give you the data also. On the daily basis, $5 trillion are being traded in this market. Okay, $5 trillion, which makes this market very unique and very high. Now, why is unique and why we have to trade in the forex market? Okay, so there are some, there are some points, the very basic points, which I want to tell you. Look, the low trading cost. Okay, the low trading cost. Now, what is it? What is that mean? Low trading cost means you can invest only $10 or maybe $10, $100, $1,000. Okay, this is not something that you have to invest. For example, if you are investing in a property, okay, for example, if you are going to buy a house or a building, for example, okay, the property is going to cost you maybe $500,000 or maybe $200,000, $300,000, $400,000. But in forex market, instead, it is the biggest market in the world. You can trade in the forex market with a very low cost, with a very low amount of investment. You can invest $100, you can invest $10, you can invest $1,000, or you can invest $100,000, $1 million. Okay, so you can trade with a very low trading, with a very low investment. Okay, this is the thing. This is why the forex market is very unique. You don't need to spend, the millions or maybe hundreds of thousands of dollars, to get into this market. High liquidity. Now, I have explained this already. The high liquidity means the more people, the more, people are trading in the forex market. And the liquidity means the numbers. Okay, let me make it simple. The liquidity means the numbers, and the number means, as I told you before, there is a $5 trillion US dollar number in the forex market. This is the high liquidity market in the world. Okay, now the next step, trading 24/5. Okay, so as we know, we have 7 days in a week, so we can get involved in trading 5 days, okay, every week. Okay, 5 days every week and 24 days a month, right? So these are the numbers, these are the days we can trade into the forex market. Okay, the forex market, currency exchange and the commodities and the metals are open for 5 days, okay, in a week. Now both ways trading. Okay, this is something very interesting. Let me tell you, if you are a beginner, I know many of the peoples are not beginner over here, but still, if you are a beginner, let me explain this for you as well. So both ways of trading means you can buy or you can sell at the next moment. Okay, so there are both ways of trading. You can buy, for example, it's 4:17 over here PM. So I'm buying something at this time, and I can sell even after 1 minute or at the same minute any other pair, any other currency pair, or maybe commodities, or maybe any other thing. So this is something very, very unique in the trading in the forex market. Now coming towards on this thing, the uncentralized market. Look, for example, if you are investing your money on something in your country, or maybe on a specific on a specific region, that makes you centralized. Okay, that makes you local market, right? So for example, if you are investing something to buy a house, or maybe investing something to buy a building or something, so that is centralized. Okay, that is a centralized market. But the uncentralized market means when you are trading in forex, this is as I told you before, the name of the forex comes from the foreign exchange. This is the uncentralized market. This is the world market. Okay, this is the world market. So this is by the way, that is the reason people are doing more trust in the forex market, right? So the next is transparency. Okay, how forex market is transparent. Okay, look, this is something very important. I want you to make a full attention, guys. Even if you are newbie, or even if you are trading for, since last 10 years or something, why this forex market is transparent. Look, for example, there is a news coming, there is a data, okay, coming from any country. That means the news is coming from the real source. Okay, for example, if US is going to announce something, okay, they are going to announce very official, either from their banks, from their government statements or something. So nobody can manipulate in this market. Okay, nobody can manipulate in this market. For example, many people are saying that we are buying and there were a manipulation in the market, and then the market dropped. This is just something I would say not acceptable, because forex market is very transparent market. No one can manipulate in this market. Why? Because the sources of the data, of the numbers, are coming from the right direction, right? So why this is why the forex market is very, very transparent. Okay, I hope you guys have learned this, why the forex market is unique. Now coming towards our next slide, which is main assets traded in forex market. Now again, let's talk about the currencies. There are different pairs. Let me make it very simple again. There are different pairs in the currencies. One you called the major pairs, and the second you called minor pairs, and the third you called the exotic pairs. Okay, we are not going towards the minors or the exotic pairs, because this is a very initial stage to learn these. So we are just talking about the major pairs and crosses. Okay. So the major pairs are the pairs which are correlated with the US dollar and Japanese yen. Okay. And pound as well. Okay. So for example, if you are talking about the Euro USD, this is the major pair. Let me highlight this for you. So if you're talking about the Euro USD, it is the major pair. Why? Because it is a correlated with, it is related with the US dollar. When you're talking about the USD JPY or maybe GBP JPY or Euro JPY or whatever you are, calling the pair CAD JPY, that will be a major pair. Why? Because it has a relation with the JPY. Okay, and GBP USD because it is with the USD. And the crosses means, that is a euro and that is a yen. Okay, sorry, let me make it a Japanese yen. Okay, so euro and JPY are the cross pairs. Okay, these are the crosses. These are the crosses of the major pairs. Okay, these are the crosses of the major pairs. Likewise, this is also a major pair, and this is a cross of pound and Japanese yen and euro GBP. This is a cross of euro and pound. Okay, so let it make it very simple. There are different pairs, major pairs, minors, crosses. I'm just telling you here the major pairs and the crosses, right? So this is how we use the major pair. I'm just telling you about the major pairs. So the major pairs are, which are related with the US dollar, Japanese yen, right? Perfect. So now coming towards on the next slide. Okay, so over here are the next slide. I have told you about the major currency pairs. The currency pairs that includes US dollars, like euro dollar, euro USD, dollar yen. Yen means Japanese yen, okay? And British pound, dollar, yen, GBP, USD, right? Coming towards the next, currencies, crosses. Currencies, crosses are, currency pairs that do not include the US dollars. Okay, so as I have told you about the crosses, there are the crosses between the euro, pound, and yen. Okay, there can be, lot of crosses, cross pairs, but we are not going to into the deep, because there are different pairs. There are many pairs in the market, right? So the cross pairs are the pairs which do not include, which don't have US dollars. Okay, so these are the cross pairs that we have already spoke about: euro, pound, euro, Japanese yen, and pound, Japanese yen, and euro, GBP, euro, pound. Okay, now coming towards the next slide, which is, which is metal. Okay, now what are metal? When you think about the metal, the first thing came into your mind is, something hard, maybe, or maybe, the gold or something. So there are definitely some currencies in the forex market, and there are metals as well. As we spoke before about these, about the stuff, about the products in the currency markets, there are currency pairs and there are metals and commodities. Now we came to the metals. Now the metals are basically in the forex market are called gold. I know many people here are used to they love to trade in gold, by the way, and a lot of us, I mean a lot of community in the forex market, they love to trade in the gold. So we call it gold, and there are different brokers. You can they called gold with only this symbol or this symbol. Okay, there are different symbols with according to the different brokers. But if you talk about the STARTRADERS, which is the most trusted broker here, the FCA regulated broker, we have this symbol for the gold. Okay, XAU USD, which is ZAW USD. Okay, now coming towards the silver. Silver is also a metal. Okay, again, different brokers have different symbols, and we are having this, the silver metal with this specific symbol, right? This is XAGUST, right? So these are the metals traded in the forex market, right? So now coming towards the next slide, I hope you guys are clearing your doubt. And by the way, let me know if you have any questions, if you have any theories after this webinar. Now coming towards the next slide, energies. As we spoke before, there are different products, currencies, metals, energies, commodities, etc. So the energies are basically crude oil and the natural gas. The energies are basically the crude oils and the natural gas. So for example, if you are talking about the crude oil means, crude oil have different symbols like US oil or maybe UK oil. There are different symbols in according to the different brokers. But the category of the crude oil and natural gas falls into the energy section. Okay, so for example, if you are talking about the metals, you are talking about the gold and the silver, okay, and the copper. And if you are talking about the currencies, you are talking about the cross pairs, the major pairs, and the minor pairs. And if you are talking about the energies, it means you are talking about the crude oils, US oils, okay, and the natural gas. Okay, again, there are different symbols according to the different brokers, but we in our broker, we have these symbols for the crude oil, for the Brent oil, and for the natural gas, we have this symbol, right? So I'm telling this because if you guys, many people suffering just because they don't know about the symbols. So that's why this is very important. And by the way, when you open our StarTrader website, you will be informed, like there will be a pop-up window from where you will have all the pairs, all the products and their symbols as well, right? So coming towards the next slide, indices. Okay, again, this is one of the product in the forex market. Indices is something which should be discussed in very, very detail, but as you know, we are doing this a very beginner session for the beginners especially. Then that's why I'm talking a very, very basic stuff about the indices as well. So indices are basically you can call it stocks. By the way, you can call it stocks. I will explain this in my future webinars, in my future sessions, okay? Because these webinars are going to be they will be like, there will be a great session, okay? We will do sessions over sessions, because from the start, from the scratch to the end, I have to, I will provide you all the knowledge about the markets, right? So in the indices, in this indices section, we are having Dow Jones, okay, which is normally called DJ, and DAX 40, and FTSE, you can call it FTSE, but I call it FTSE 100. So again, there are always different symbols according to the different brokers. Dow Jones, we call it US 30, DAX 40, we call it Gear 40, and FTSE 100, we call it UK 100, right? So this is how it works. So let's come towards the next slide, which is called commodities. Commodities are, let me tell you, after the currencies and after the metals, let me tell you something. The commodities are the most traded things, the products in the financial markets. Okay, because the commodities involved in the general life products. Okay, so in commodities, in this category, we have coffee, okay, we have sugar, and we have wheat. Okay, so there are different types of coffees and sugar and wheat, and again we have different type of the symbols. We have this coffee C, we have this sugar C, we have this wheat C. Okay, so these are the commodities. Commodities are basically the goods, okay, the basic goods for a human being. Okay, that's why these are the most traded pairs, traded things in the financial markets, right? So this is okay, this is it. So how to read exchange rate? Let me come to another slide. I hope you guys don't have any issue with the recent slides. We have learned about the commodities, indices, energies, metals, and metals and currencies. Yeah, perfect. So now we are coming towards how to read exchange rate. Okay. Okay, let me make it simple. For example, I think I have to, yeah, okay, how to read the exchange rates. For example, you are going to, somewhere to exchange your currency, or you are going to the bank to exchange your currency. And for example, if you have traveled somewhere from, for example, from US to Dubai, so you came to Dubai to exchange your currency into the different currency. So you can see there are always the board. There are always the board, or maybe a screen. There are always the prices are running, right? Like for example, this is the USD. For example, this is the USD. Okay, and this is, like for example, this is DHS, this is dirhams. Okay, so 1 USD is equal to, for example 3.4, for example. Okay, so this is the exchange rate. This is the exchange rate, which means if you have 1 USD and you are going to exchange 1 USD, you will get 3.4 dirhams. Okay, so this is how we read the exchange rate. Okay, so there are different exchange rates. For example, if you are going to convert USD into euro, there will be the different exchange rate. And for example, if you are converting USD into euro or maybe pound, there are always the different exchange rates, right? So this is the thing. Okay, my apologies. Okay, now coming towards the next slide, let me make, okay, perfect. So the next slide is, okay, over here we are going to see how we can see the exchange rate. Okay, so this is euro and USD. Okay, let me tell you that euro is a base currency. For example, forget about the base currency or the code currency, just talk about how to read the exchange rate. No, for example, you are converting euro into US dollar. Okay, there are always the two rates. This is the buy price, and this is the sell price. For example, if you are going to buy the euro against USD, you are going to pay this price. Okay, and if you are going to sell euro against dollar, then you have to sell with this price. Okay, there are always the price difference. Okay, and by the way, in between this price there is called spread with the broker. We will talk about it in our next slides, right? So this is how we can read the exchange rate. There are always the different rates, buying rates and the selling rates. Okay, for example, if you are going to sell USD, okay, to buy euro, okay, or if you have euro for if you are selling euro to buy USD, okay, there are always the different rates. You have to sell your euro at the different price, okay, and you have to buy USD in the different price, right? So these are the two different price, buy price and the sell price, right? So now coming towards, again, I'm telling everything with a very stretch, and I hope you guys are enjoying this webinar, because this is a very beginning. And if you are looking to start into this financial market, this session is for you guys. Okay, so I want you to make full attention. Okay, so now coming towards again, like uh, it is all about the rankings. Okay, well, let me tell you, the rankings actually depends on the economy. Okay, economy is something which different countries have. For example, US has the good economy, China has the good economy, Japan has the good economy, for example. Okay, so the currency pair rankings are based on the different type of economies. Okay, so for example, European community, Europe has the best. For example, Europe has the good economy, then their euro will always be, you know, ranked high. Okay, and for example, if US has a very good economy, then US is basically US dollar is going for a rank high. Okay, so it's all depends on your economy, the country's economy. Okay, the rankings are not like something this is fixed. The rankings are changed. Okay, but currently we have the top ranked pair is called top ranked currency is called USD, right? So we are trading basically against with the US dollar. Okay, so the US dollar is basically the base, the high ranked currency for now. So this is all stuff, written over here. And okay, trading session timing. This is also very, very important. Look, many of you people don't care about the sessions. Okay. Here we have 4 sessions, but let me tell you, the major sessions are our Asian session, European session, and US session. The European session is also called UK, the London session, okay? And the US session is also called the New York session, okay? And there is Australian session as well, but this is the very least trading session. Like people do not trade in the Australian session just because of the time difference. Okay, so why sessions are very important? Let me tell you this. Sessions are important because the currencies are overlapped, the prices are overlapped. Okay, when for example over here in Australian session, for example, the market opened at 12 and closing at 9. By the way, these timings are according to your current your country. For example, if you are sitting in US, there will be a different timing. I'm sitting in Dubai, so there is a different time. Okay, so the Asian session, this is also called Japanese session. Okay, so this session opened at 2 and closing at 11, and European session opens at 10 and closing at 19. US session open at 15 and closing at 11. Okay, so there are different timings according to the sessions. There are different sessions: Australian sessions, Asian sessions, European sessions, and US sessions. Okay, so I want you to take this thing very important. These sessions are very important. For example, if you are trading something, this is something advanced, I'm telling you, but if you are trading something, for example, Euro USD in the Asian session, and you are predicting something, the pair is going for maybe the bullish or bearish, that can happen, that when the Asian or when the European, when the London session or when the US session, the New York session is going to start, the direction can be changed. Okay, so that's why it is very important to understand the sessions. Okay, now coming towards our next slide, and let me erase all the triangles. Okay, so over here, okay, perfect. So this is the professional advice, by the way. Trading in forex market is available 24 hours 5 days a week, but the times when sessions overlap are very important, and it is necessary to watch closely. Okay, so that's what I was telling you. The sessions are very important. For example, if the London session is closing, that means the US session is opening. So the overlap timing is very important. Okay, you have to understand this. And by the way, we will understand this, you know, in the future in a very deep discussion, right? So now coming towards a very important and a very basic thing, okay, that is called spread. Now I have to move my screen. You know, I have to show you something about this. What is spread? Okay, for the general discussion, let me tell you, the spread is the commission, okay, for the broker. The spread is the commission which brokers charge you for opening your trade. Now, for example, okay, let me, I have a very brief discussion on the spread, but I think we are going for a very basic discussion on the spread. So for example, this is the pair, this is some pair, for example, this is gold or euro or something, okay? There are always two prices, bid prices and ask prices, okay? So these are the bid. In between these bid and ask prices, this is basically your spread, okay? This is basically your spread, okay, from here to here, for example, okay? This is the trading view. I'm showing you this on trading view. And for example, we have 6 pip spread, okay? So that is basically the commission, okay, for the broker. For example, either you are selling or you are buying, you know, the commission will be charged from the broker. So this is basically a commission for the broker, and this is called spread, okay? So we will learn about it, you know, when we start our discussion in the next, because our next topic is all about the MT4s and the markets and how to use, and you know, I will be telling you everything about the MT4, about the charts, everything. So I will explain this spread thing, how to counter and how to measure these spreads in my next session, right? So for now, just for a general discussion, the difference between the bid and ask price is called spread, and the spread is, you know, charged by the broker. Okay, for example, if you are placing some trade, you're placing your buy order, your selling order, there will be a commission charged by the broker. And by the way, let me tell you that different brokers have different kind of spreads, and let me tell you that, you know, some brokers cheat. They, you know, they can exceed their spread counts, they can exceed their commissions without telling you, okay? But we as StarTrader, we cannot make this. Why? Because this is something, you know, not good. We do not extend, we do not exceed the limit of the spread, okay? We have the very normal and very small spreads. It means we are taking very small commissions from your trades, okay? And we, you know, we cannot exceed or something, okay? When you open our website, our spread counts will be, you know, there will be a pop-up window, so you will have the spread counts according to the different currencies or metals or commodities, right? Because we are the FCA regulated brokers, so we cannot and we do not exceed our spread counts, right? So this is all about the spreads. Now coming towards our slides. Okay, this is the spread, and now, okay, I have told you all about the ask price and the bid price and the commission and everything. Now there is something which is also important, that is called leverage. Okay. Now let me tell you, you know, this thing very simple. But before I just want to explain this, it is a tool provided by companies to maximize your profit potential in order to achieve a higher rate of return, but it also raises the level of risk. Okay. Now, as I told you before in my recent discussion, that we can trade in the forex market with a very minimum investment. Okay, because this is a very low cost stuff we do in forex market. So basically leverage is something which is provided by your broker according to your investment, okay, to enhance, to increase your returns, to increase your trading levels. Okay, so for example, let me come to another slide. For example, you have deposited 1000 USDT or USD, 1000 USD, and what will be your look? This is something which is directly related to my previous slide. Okay, if you have noticed this, why I told you that this is a low cost thing. The forex market is a low cost investment. Okay, you can start investing by $10, $100, $1,000 or whatever. Okay, so this is a directly related leverage. Okay, so for example, you have invested $1,000. Okay, it doesn't mean that you can only buy something which gonna makes you maybe $500 or $1,000 profit. Okay, the leverage is basically going to enhance, going to increase your purchasing power. Okay, so for example, if you have 1 to 100 leverage, okay, it means your purchasing power is only $1,000. Okay, there is a formula, by the way. We are going to explain these formulas when we shift into our MT4 session, right? But for the general discussion, let me tell you that, for example, if you have 1 to 100 leverage, it means you have only 100 purchasing power. Okay, and if you have 1 to 200 leverage, it means you have only this purchasing power. Okay, and excuse me, for example, if you have 1.400 or 1.500 leverage, it means you have more potential, you have more power to trade. Okay, you can trade for, it means for 500 you can trade with $500,000. There is a formula. Okay, so let me go to the next slide. Okay, so these are the leverages. So it means, for example, if you have the biggest leverage, okay, so initial balance is 1000 and the leverage is 1 to 100. It means your buying power is $100,000. There is a formula used for this leverage. Okay, and for the according to the different lot size, for example, the currencies, if you have the micro lots, this is 0.01. Let me tell you this also. For the micro lots, there are different types of lots: micro lots, mini lots, and lot standard. Okay, so for example, if you are talking about the micro lot, it means the lots which has 0.01. This is a 1 cent lot, which means this is a micro lot. You can do this, for example, 0.02, which is the micro lot, and the mini lots are 0.10 or 0.20. These are the mini lots. Okay, and the standard lots are which are directly to $1, okay, or maybe $2, or maybe the $3. Okay, so these are the difference between the micro lots, micro, mini, and standard lots, right? So with the currencies, if you are using the micro lots, you can you can get 1000, and if you are using the mini lots, you can get 10,000, and if you are using the standard lots in the currency, you can get 100,000. Okay, same over here in the gold. These are the ounce pairs, so the 10 and the 100, and the same as above the 50 with the silver, the 500, the 5000, and the crude oil. This BRL is barrel, 10 barrel, and these are the lots, by the way. The barrel, the 100 barrel, and the 1,000 barrel. Now let me tell you, according to these metals and energies, again there are different types of lots. Okay, according to the different brokers, you can use any different types of lots, so it depends on the brokers. But we are, for example, if you are talking about the micro lots on the gold, you can use one. Okay, that will be your micro lot. And if you are using the 10, which is your mini lot, and if you are using straight 100, it is your standard lot. Okay, the silver, the micro lot is 50, the mini lot is 500, and the standard lot is 5,000, right? So there are different lots, different lots according to the different brokers, right? So now coming towards our next slide, which is PIP. What is PIP? PIP is basically account. Okay, PIP is account. For example, let me give you some example on it. For example, if you have traveled, if you are walking, okay, you're one step. If you took 10 steps, it means we can relate into pips. So you walked 10 pips. Okay, so pip is basically this distance, okay, from for example, if you have bought something from a specific price and it went either bullish or bearish, the distance between that is called pip. Okay, so this is the overall discussion about the pip. Now let me tell you, how do we calculate the pip? The pip is basically, for example, this is the pair GBP USD, okay, pound USD. This is the pair, and we have this 1.3030. This is the current rate, okay, and suddenly it changes to 1.3031. Now there is a difference. If you can see, there is a difference. Now this is called 1 pip difference. Okay, this is a 1 pip difference. Okay, and for example, if you're talking about the USD JPY, the price over here is 111.35, and it changes towards 111.36. It means there is a 1 pip difference. Now the difference is the bullish, because 31 is bigger than the 30, the last number. It means the price went bullish. Same over here, the price went bullish, right? So these are the pips. Perfect. So now coming to, by the way, if you have any question regarding the pips or anything, you can write me. Okay, so now these are the different pairs, like ZAR USD. This is the gold, 1710.20, 17.10. It means the price decreased with 1 pip. Okay, and for example, this is the crude oil, this is the silver or oil. This is 99.66. The price went down with 1 pip, and the price is now 99.65. Okay, so pip values. So there are different pip values according to the different lot size. As I have told you before, according to the micro lots, mini lots, and lot standards. So for example, if you are trading in the currency with a micro lot, okay, micro lot is, for example, if you are trading with 0.10, and okay, let me make it simple for you. Okay, so over here, okay, let me tell you something. So for example, if you have traded something or any pair, okay, with 0.01, for example, we have moved, like, for example, yeah, the 100 pips. Okay, these are the 100 pips, right? So for example, you have bought something with 0.10. Okay, my apologies, let me use the marker. Okay, so for example, we have bought this pair with 0.10 lot, and if it's moved towards 100 pip, it means we have earned $100. Okay, and for example, if we have bought this with this lot size, okay, and it moved 100 pips, it means we earned $10. Okay, and for example, if we bought this pair with the standard lot, which is 1.00, and it moves the 100 pips, it means we have earned $1,000. Okay, so this is how we calculate the measurement, the investment returns according to the different lot size. Okay, different lots. So this is how it works. And let me make this okay. So these are the pips values. Okay, this is how we can calculate the pips values. Okay, again, this is something I have explained to you. And the margin. Okay, margin is something you should be considered as a very, I think, very important, because definitely we are going to learn these things to the advanced level in the future. But let me tell you, margin is something you should consider this on a very serious note, because this is not something to play or just don't take it serious. The margin is something which is going to provide you the limits. Okay, which is going to provide you the limits to get involved in the trades. Okay, so I'm going to show you some the MT4 picture to tell you what the margin is. Okay, so over here, by the way, we are going to discuss this MT4 in our next session, because in our next session we are going a one step advance. So this is the MT4 MT4 platform. So the margin is basically something which provides you the limits. Okay, for example, let me give you one simple example. So for example, you have this balance. Okay, you have deposited this money, $49,983. Okay, you have this equity. Equity means you have for example, if you have, okay, let's not talk about this for now. Okay, this is your equity now, because there is no trades running in this platform. And the free margin, you have this free margin. Okay, the more you get involved in trading, the more you are opening your trades, your margin will be deducted. Okay, again, this is all depends on this is a direct related with your your leverage, your spread counts and everything. So again, let me tell you, we as StarTrader provides you 1 to 500 leverage. Okay, and which is effective and directly related with your margins and your spreads and everything. Okay, so this is something you should consider on a very serious note, the the margin. And there is a formula based on how to calculate your margins. So we are going to talk about this when we are going to have the next session about the MT4. So yes, these are the margins. And now coming towards our next slide. Okay, so here I'm telling you, as I told you before, if you are getting involved, if you are opening your trades, it means you are getting involved into the margin. Okay, so for example, you have opened the Euro USD trade. Where is the mark? Okay, for example, you have opened this trade, Euro USD or any trade. Look, this is the margin of this trade deducted from your overall free margin. Okay, let's not talk about the margin levels for now. This is something advanced. We are going to learn it in the next session. So this is the margin deducted from your free margin. Now you have the different free margin. You have this free margin. Okay, so the more you get involved, the more your positions open, okay, the more margins will be deducted according to your lot sizes. Okay, for example, you have opened the GBP USD with the one standard lot, there will be, for example, 200 or maybe 230 margin, which will be deducted again from your free margin. Okay, so the total number of volume and the total number of margin will be deducted from your free margin. Excuse me for this mess of the charting, but anyways, this is the margin. And yeah, now coming towards our next slide, very important and very interesting, by the way, the order types. Look, there are different types of, this is the beauty of the forex. You can trade when you have time. You can trade by sitting in front of the computer, in front of your mobile, in your laptop, on your laptop or something. And even if you don't have time to enter, execute your trades instantly, in the market, you still have time, to enter the market. You can place different orders. We have different types of orders. So let's discuss about the different type of orders we are using to trade the forex market, right? So order types are, let me tell you the stop loss and take profit as well. For example, if you have opened any trade, okay, there will be definitely in the future we are going to learn how to trade exactly, but there is something which is called stop loss and the take profit. Okay, so the stop loss is something, for example, if you have if you have bought, or if you have going for the long, the buying direction, or going for the selling direction, okay, and for example you have sold something, okay, let me make very clear over here for you. Okay, so for example, excuse me, okay, so for example, let's talk about the stop loss. Okay, so for example, I am selling the Euro USD from this price, for example. Okay, so my stop loss is here. I set my stop loss here. Okay, so if the price is going above this level, it means we are going to trigger our stop loss. And let me tell you, stop losses are very important. Please do not risk your equity, do not risk your balance without trading without using stop losses. This is the very biggest risk. Okay, this is the big risk for your equity, for your to have a margin call. Okay, so stop loss is very important. Definitely there are always a very deep study behind every setup, or behind setting a stop loss or take profit. So for example, I have stop loss set on this. I have opened my position for the selling direction. I supposed to see the market, the bearish market. Okay, but what happened? The market went above and hit my stop loss. I'm exit from the trade with a minimum loss. Okay, and what is the take profit? And for example, I have entered my position from here, and my target is here, my take profit is here. Okay, and just because I was looking for the bearish market, so I set my stop loss here and my target is here, and the price went down and my target hits, it means I am out from the market with a massive profit. Okay, so these are the difference between the stop loss and the targets. Vice versa, if we are going for the long position, we can set our stop loss and the targets, right? So this all depends on the market, on which side you are going. So this is the general discussion about the stop loss and the take profit. I hope you guys have understood. So now coming towards the next slide, the order types. Okay, look, there are different types of orders. Okay, the pending orders and the orders which are executed on the time. Okay, so what are the pending orders? Pending orders are something which can be placed into your MT4. For example, let me again share my screen over here. I'm opening. Okay, so now, for example, I was looking, for example, okay, I was looking to buy something from this area, from this price. Okay, I'm looking to buy this, pair, for example, from this area, and and I don't have time to look into the market, so I'm just looking if the price is going towards this area, my order executed automatically. Okay, and we have already set our stop loss and target, either the price is going for the bullish direction. Okay, so now for now I'm looking for the price to go for the bullish direction. So from this price, which means I can set my limit order, the buying limit order. When the price will be here, my buying order will be executed into my MT4, and then the market will shoot up to the bullish direction. Okay, this is the buy limit order. Okay, now coming towards the sell limit. What is the sell limit? Excuse me. Okay, so what are the sell limits? For example, you are looking into the market, you are looking the market to sell, to go for the sell direction. For example, I'm looking the market that if the market will hit this area, it will be like crashed. Okay, so I should be entering from this area. Okay, so what I can do is I can make the limit order, the sell limit order. When the price will be here, it will be going for the bearish direction. Okay, so these are the sell limit orders and the buy limit orders. Okay, so this is how it works. And now coming towards our next order type, our next order, which is called, okay, so we have learned about the buying limit order and the sell limit order. So now coming towards the buy stop or the sell stop. These are very major and the basic, by the way, basic orders as well. So for example, you have predicted, if the price is going to break, or if the price is going to break this area, then it will go further down. Okay, it will go further down. So what I'm going to do is I'm going to make a sell stop area. Okay, sell stop. So when the price will be hitting and breaking this area, this will be like your sell stop order will be triggered, and the price will go for the bearish direction. Okay, vice versa, if we talk about the buy stop order, for example, I'm looking to buy the pair after this area. Okay, so what I'm going to do is I'm going to place my buy order, okay, buy stop order at this area. So for example, if the price is coming like this, and when it broke this level, it is going for the bullish direction and activating my buy stop area. So this is the difference between buy stop and the buy limit. Okay, the limit is something you have set on the top or from the bottom. For example, if you are buying something, you are providing the limit from the bottom, and if you're selling something, you have opened the limit on your on your top. And the sell limits and sell stops and the buy stops work very differently. So these are the orders, and there are some more orders which are called execution. Instant execution is something you can execute your trade. For example, I'm looking this trade to sell now or maybe buy now. Okay, so what I'm doing is I'm just doing buy. So this is my instant execution, placing your stop loss, your target, and you have placed your order. Okay, so this is your instant execution. Same, if you're going to sell this pair from this area, you just instantly execute it into your MT4. You sold this pair from this area, and this went down. Okay, these are the instant execution into these are the instant execution orders, right? So this is how it works. Now coming towards our next slide. Okay, so okay, so these are the orders. So here are some of the tips according to the MT4. By the way, we are going to learn these in a very advanced levels in our next sessions. But still, if you you can learn from this. If you are going to place new order, just by the mobile MT4, you can open the new order and you can go for the buy. Over here you can see the different uh, trade types. So you can set buy stop, sell stop, buy limit, sell limit, or the instant execution. You just have to put the price. For example, in case of the buy stop, you have to place over here at what price you want your order to be placed. You are placing the buy stop price here, and then you are placing your stop loss here, and then you are placing your target here. Okay, so now coming towards, yes, these are the buy stops, sell stops, and buy limit and sell limit. So these are some advanced pictures. Accordingly, our trading our orders. So for example, if you are looking for the buy stop, as I told you before, if we are going for the buy stop and we are thinking that the market, I'm going to make my order above this area, then buy stop is working like this, and the sell stop is working the vice versa. And the buy limit is, for example, if the price is moving down, we have the limit order over here, and then the price will go up. And the sell limit is, for example, if the price is going higher, and from this area I'm looking for the bearish direction, then we can go for the sell limit. So these are the some basic and very important discussions about the forex market. So I hope you guys have enjoyed, and if you have any questions, I'm just taking some rest for maybe 5 to 10 minutes, and meanwhile I will be watching your questions, and then we will be discussing your queries.
You are repeating the same words, like for example, like you said, for example, maybe 15 times in like 2 minutes. That's my only comment. Like that's it. Just if you can control it, it's good. It's good to go.
The explanation was good.
Yeah, overall is fine. Like overall is fine.
It looks, bro, it looks 1 hour and 15 minutes.
Yeah.
It's a long one.
Yes, long one.
So Mohammed, we're going to
leave. Yeah, I sent it to you. I hope you see it. I told you repeat same words so much.
Oh,
No, it's fine, it's fine. This is private, privately sent.
So there are no questions right now?
I answered all the questions.
Ah, perfect. Yeah. Tell me the next stage of the session. Tell me the next stage of the session and the time.
The next stage?
Yeah.
No, just. Oh, okay. Next one.
No, I am just
for the advanced or the beginners.
Yeah, for the beginners.
For the beginners, next one will be next Monday.
Next Monday.
Next Tuesday. Sorry.
Okay.
Next Tuesday, introduction to MT4.
Okay. The date will be.
The date will be 27th.
27th.
And for the advanced,
yes,
Fibonacci on Wednesday. Also, you will be presenting it.
Wednesday on 22nd. In October.
22nd.
22nd this month.
Fibonacci.
Okay, the advance is 22nd.
Yes, will be Fibonacci.
Okay. Fibonacci.
Yes. Remember when I told you Fibonacci is cloud?
I can announce this, right?
Mm-hmm.
I can announce.
Yeah, you can. We will send them the emails with links. So quickly because we have to finish.
So you have already replied all the questions. So welcome back, guys. Hope you guys have enjoyed this session, and we have already sent all the answers to your questions. Now, let me tell you that we have two types of sessions. Okay, so I will be actually providing you the basic knowledge of trading and then the advanced knowledge of trading. So if you are a beginner, you should go with the basic trading, and the next session is going to have on 27th September at the same time, and accordingly the basic discussion and the advanced topic at the advanced discussion, the advanced session, according to the market, analysis or something. We are going to have a very nice session on this 22 September, right? So if you are looking for the advanced sessions, the advanced trading sessions, you can join on 22 September. And if you are looking for the basic sessions, you can join on 27 September. By the way, we have already have your emails and phone numbers because you have already registered. So we will send you the information links, and we will notify you by your phone or maybe with your emails. See you in the next session. Take care, guys.